focus on some real estate earnings now. Lodha reported a steady performance in the first quarter. Management is confident of achieving that full year sales guidance of 26,000 crores. So H2 will have to really fire. Sushil Kumar Modi is Executive Director of Finance at the group. He's with us now to take some questions. Sushil, good morning. Prashant this side. So morning. In Q1, you've basically done about, 21% of your guidance, right? 21% of your guidance.
Yes, that's right.
So you're on track for that 20,000 crore plus number for the full year? Because some are saying maybe we've hit a bit of a soft patch here, Q2 and beyond.
Prashant, if you really see our business and the trend for last few years, you would have always noticed that in general, our industry and we as in particular always deliver significantly far higher in second half, because the festivities, which is precursor to our business in a substantial manner, end up in our country coinciding with the second half. So to that extent, in general, 55-60% of the business in any case gets originated in the second half, and we don't see this year to be any different. So pretty much we are on track. We see first half potentially delivering 40-45% of our business. As you rightly pointed out, 20% plus we have already delivered of the yearly guidance in the first quarter itself. So yeah, we remain on track, and that can also be seen vis-a-vis the fact that our significant amount of the launches are going to be also coinciding in the second half. We launched just 8,000 crore worth of inventory, in the Q1, but the second half and the remainder 9 months will have a significant launch pipeline around 17,000-18,000 crore, which, needless to say, we would be more and more coinciding with the festivities to capitalizing on those auspicious time period when the consumer tend to consummate their transactions quite often.
Sushil, are you having to moderate price increases? Because I think what the results say is that average like-for-like price growth was about 2% quarter on quarter. Now it's nobody's case that there should be. We had a few years of very good run there in terms of price growth. But does this suggest a bit of a tilt towards affordability? Do you have to do that to kind of sort of drive volumes through now?
Prashant, again, this is something very fundamental to our industry, right? The affordability is the key, and thereby we always have maintained that the price growth has to be far more moderate, coinciding with potentially the inflation in the country, and always to track some bit lower than the salary growth that our country generally sees. So if the salary growth is more in the handle of 8 to 10%, price growth should be more like 5, 6, 7% at best, and which is what you would have noticed again going back in last 4 years. Even last year we delivered around 5% price growth, and that price growth kind of comes across 4 quarters. So to that extent, the first quarter actually is no different. 2% is price growth out of the 5-6 that potentially we target to ensure that the affordability remains robust, and the demand that continues to sit in the country, which to our mind is humongous, knowing the home ownership being so low at this point, should unfold with the affordability being ensured to be intact. And that's the strength of our brand, Lodha, right? We ourselves make sure whichever geography that we are playing, and by virtue of the fact that in any case we are going to be amongst the top 3 players in those geographies or those cities, we have the ability to navigate and make sure that the industry in general ensures that the price growth is far more moderate and ensures the affordability to be robust.
All right. Hi, Sushil. Good morning. Good to see you. When, as you're saying, you're sounding confident about pre-sales of around 21,000 crores for this fiscal, right?
Absolutely.
All right. And the broader, outlook is that you hit around 50,000 crores by 2030. At that point of time, when you go to that sort of a scale, what could the geographic mix look like if you could break it up for us?
Taisel, as you know, that our strategy in terms of geographical expansion is always go deep into any city that we pick up, and rather than wide. And that too, we are always kind of very measured when we enter into any new geography. You can take an example of be it Pune or be it Bangalore that we entered, recently. Bangalore we entered in 2022, but we were very, very moderate. And we ensure and we believe in creating the right set of capabilities, the sales machinery, and the local capability to deliver the business. And once that gets done, which typically takes 2 to 3 years, we get to look for the market share in that particular geography rather than going all out for numerous cities. So that being so, the Bangalore is the city where we entered in 2022. Now this year, we having been satisfied in terms of our local capabilities, the sales machinery, the skill set, the local regulation, we are going for the growth, and which is where we feel confident that in Bangalore market, perhaps we will more than double the delivery or our sales this financial year. And so is the time that that we are now looking for another city to be added in the which will go for the pilot stage, just replacing Bangalore, because Bangalore goes for the growth. So potentially the NCR is the one which we are seriously evaluating and hoping that we should be able to tie up the land parcel in this year and thereby launch in the coming financial year. So net, back to your point, by the end of the decade, by the time that we hit our target of 50,000 crore of sales, we would be looking for potentially 40% plus coming from outside Mumbai.
Okay, all right. Sushil, just to probe you, since you spoke a lot about Bangalore, and that's one of the IT hubs, right, of India. And news that's coming in today is about TCS going ahead and cutting its workforce, looking at around 2% cut. How much of, the transactions that you'll do come in from tech-related space, if you have a rough number out there? And do you think this will be a bit of a dampener with regard to what's going to happen in the Bangalore real estate market itself? Because some were talking about a read-through. Yesterday social media was a buzz about TCS cutting its workforce. And there were some parts of the market that believe that maybe the Bangalore real estate market could get a hit. What do you have to comment on that?
So Tyson, this is a bit of a dichotomy that we all are seeing, right? So there are certain spaces which are not doing so well, and equally there are many more spaces which continue to do well, and which is where our country's GDP in real terms, we even now, in spite of whatever Trump tariff tantrum and whatnot we speak, is being expected to be in the handle of around, let's say, 6.2 to 6.5%, and nominal terms kind of hitting double digit. So that being so, while one side, let's say the entry-level IT is not doing so well, but equally, as we notice, and you also kind of tracks, the GCC is doing phenomenal. So there are numerous facets of the industry which continue to do well in spite of last 3 years not being so good with the IT, and at least from the frontline reading that we pick up. But equally, the demand in Bangalore city year on year, even in last three years, continues to do good, and which is where all the top-notch players, which caters to typically perhaps the audience with salary level, perhaps let's say 10 lakh plus, which is what we cater to, they continue to do well, and the demand for them continues to remain robust. So if the country has to grow, I think the real estate in any case is a precursor, because real estate enables many other industries to perform, be it steel, cement, cable, tiles, numerous industries of the employment.
No, absolutely, Sushil, but I think that was a very, very pertinent question that Nigel asked, because the job cuts that we're talking about now at TCS, they're going to be impacting the senior to mid-level positions as well. Let's hope that this is not going to be replicated across the IT sector. When do you sort of launch in Bangalore, and much of the sales are slated for FY26, or is it FY27?
No, so the sales is happening every year. As I said, this year, current financial year, which is FY26, we are going to double our sales, more than double from the last year. So we are expecting to hit 2,000 crore plus of the sales coming from Bangalore this financial year, as against less than 1,000 crore that we delivered the last year. So yeah, we have already launched one more project, and thereby we have 3 locations already up and running. We added 3 land parcels last financial year in Bangalore to look for the growth, and we added one more in the current quarter, the Q1.
Sure.
So yeah,
So 1,000 crores, yeah? You're penciling in 1,000 crores of the sales coming in this year in Bangalore with all your ongoing projects, correct?
2,000 crore. 1,000 crore was last year.
2,000 crores. Got that. More than that. Okay, got it. Thank you very much for joining in, and good luck to you with those plans. That's Lodha developers, Macro Check. Sort of their projections for the whole year.